Driver of the performance was the equipment business in Southern Africa and Russia, and it was on the back of improving commodity prices for most of the period and strong mining activity, and also some significant contract wins, particularly in places like Mozambique and the Zambian copper belt, and then in Russia where we had some very large projects, one with Polish gold, and that really was a strong underpin to the results this year.
We also had operating margins increasing quite substantially from 3.7% to around 4.6%, quite a strong jump, some would say. Is it sustainable at these levels, or is there more room for improvement?
I think there's a little bit more room for improvement. I mean, our longer term target is to get to the 5% level, and I think it's dependent in part on the population of installed machinery in our territories, because that contributes to the aftermarket revenues, which is where we make our margins. And so I think if we're able to sustain increases in activity levels through 2012 and 2013, I think there's a little bit more room for margin expansion.
With regards to acquisitions, you have quite a bit of cash on your balance sheet. You're sitting at around 2.5 billion rand. And then with regards to your debt to equity, that's declined to 36% from around 47%. It seems that you've been embarking on bolt-on acquisitions as opposed to larger acquisitions. What do you plan to do with the cash? Are we going to see larger acquisitions for Barloworld?
Yes, well, I think one of the interesting things in the pipeline is this Bucyrus transaction, which Caterpillar closed with Bucyrus in July this year, and they're presently in discussions with their dealership body with a view to transitioning or selling the Bucyrus distribution rights and assets on a dealership by dealership basis. So we would look at that. We're in early discussions with Caterpillar around that, but that would be a sizable transaction for the group.
But you're not really able to give us an indication in terms of what actual impact it would have on cash flow and profitability at this point?
Not at this stage, because we haven't yet been granted access to the data room, at which we'll get a better idea of exactly what the revenue and asset potential is of that business over time.
You mentioned Zambia, of course, Mozambique and even Botswana. We're starting to see quite a lot of growth coming through and really having to do with the fact diamonds, iron ore and copper doing quite well. Prices are coming down slightly. Are you concerned about a slowing within these economies?
Look, commodity prices have come off their recent highs, but we monitor their levels, and currently they remain above levels necessary for future mining investment. And so currently mining production and mining activity levels we haven't seen any slowdown in, and I guess that bodes well for the year ahead.
But you are keeping a close watch on that?
Yes, I mean obviously our fortunes are linked one way or another to commodity prices, so if there was a catastrophic fall off it would have an impact, but at this point in time we're not seeing that.
You also say construction in South Africa is still relatively benign. We know that we have seen Eskom projects coming to the fore. Sanral has also been very active. What kind of future do you foresee with regards to construction right now? How are you positioning yourself?
We think the medium to longer term outlook remains good, because there's need for significant infrastructure investment within South Africa. The short term outlook, however, probably still remains relatively muted.
With regards to Iberia, of course, we know what is happening in Europe and the Eurozone crisis. We've seen a further drop there. We know that you've also done a bit of restructuring here. What kind of future do you see in this region, given the fact that you have some projects that will come onto your books in a couple of years' time? Power and infrastructure seems to still be an area where we're still seeing a bit of life.
Yes, look, the Eurozone crisis has no doubt had a major impact on the industry there, but we've had some very significant contract wins this year. They will deliver over the period 2012 to 2014, so that will provide an underpin to our construction revenues and also one of the mining customers in the northern Spain. But we're also putting a lot of effort behind our power systems business, electric power generation, as well as the marine and petroleum segments. And Caterpillar themselves have made some acquisitions in this space over the last 6 to 12 months, and we'll be looking at further opportunities on the back of that.
And speaking of opportunities, also completing your acquisition of Russian operations as well. You also cite that there's slight slowdown there that you've seen come to the fore, but nothing too dramatic. Any concerns about Russian growth going forward?
No, I think this year was fantastic. We nearly trebled our operating profits from around the $12 million level to around $33 million. Our order books are slightly lower at the end of September this year than a year ago, but a year ago we had a large once-off Polish deal for Polish gold in that order book. So I think the underlying demand, particularly in the aftermarket business, is still very strong, and I expect a strong year ahead in Russia.
Let's touch on Avis. Also quite fascinating to note that you are up on the year despite the fact that we had a very strong 2010, given the fact that we had the Soccer World Cup on the go. You're still up market share slight issue, more competition coming to the fore as well. Tell us about the trends that we've seen and what you expect for this holiday season.
Yes, look, last year was bolstered by the World Cup effect, and that's why it was pleasing in the second half of this year that we managed a result slightly ahead of the second half of last year. However, the market does remain competitive. Everybody going after market share. We're still in a position of market leadership in car rental, which is important to us. We think that we'll be able to maintain the positive momentum of the second half into next year, notwithstanding the competitive trading environment.
Motor retail, we've also seen quite a substantial increase there, an increase of around 14%. Even in Australia, revenue was up around 22%. We saw an interest rate cut coming through in Australia. Here we weren't that lucky, but we still have interest rates at 30-year lows. Do you think that we could still actually see a stronger consumer down the line? Do you expect further double-digit growth?
I think growth will slow in Southern Africa into 2012, but will still remain positive. And we hope to get some further traction on our parts and service revenues there. In Australia, we had a year where profits improved from 82 million to 100 million, but that was driven mainly by our parts and service revenues rather than new equipment sales. But overall, I think a pleasing result, and we expect another solid result in the year ahead.
Let's just touch on the overall outlook going forward. We know that there's going to be a big push for African development with regards to the agricultural sector. We know that mining is very much entrenched with regards to the fortunes of this African continent. Where do you see the most growth coming through? Is it still related to mining activity?
Mining, I think, is going to be strong, and I think we're very well positioned for that. But at the same time, the medium-term prospects for infrastructure across the African continent and in Russia have to be good on the back of urbanization and industrialization. So infrastructure and power are the two other segments of big focus. And as you made mention, agriculture, we see enormous potential in Southern Africa, and we're looking to grow our footprint there and in Russia.